Okay everybody, hope you're well and welcome back to my channel. My name's Darren McDowell. I've been trading the markets for 20 years and I've helped over 1,000 students over the last 3 years on how to use order flow, and in this video I'm going to show you the basics on how to actually use it, and I hope you enjoy exactly how I use the footprint and how I interpret the footprint, should I say. And you are going to learn something. All you need to do is watch this short video. I know you might be skipping on to the next video to find something that's going to entertain you, but if you want to learn something that's practical and you can implement it into your trading, please watch this video and I hope you enjoy it. So let's get started. So when you're trading the markets, we have different order types. We have what we call buy the market, we have buy limits, we have buy stops, and we have buy stop limits. We have sell the market, so that's aggressive selling, so that's when you actually execute a trade. And you have sell limits, when you set a sell limit, you'll know what that is. Sell stops, and we have sell stop limits. Okay, these appear in different sections on the footprint. So when a buy market here matches with a sell limit, it appears in the ask. When a buy limit matches with a sell market, it appears in the bid. When a buy stop matches with a sell limit, it shows in the ask. A buy stop matches with a sell market, appears in the bid. And then a sell market that matches with a buy limit appears in the bid. And then a sell limit matches with buy market, appears in the ask. And a sell stop appears in the buy limit, matches with the buy limit, appears in the bid. And the sell stop matches with the buy market, appears in the ask. Let me just show you that on the depth of market. Okay, so if you've not seen the depth of market before, this is where all the contracts are executed, buy limits, sell limits, so on and so forth. So let me just go through this with you. So total amount of contracts executed is this arrow here. So in this instance it's 799. Let's change the colour, that's a little bit better. This is the current price level, this arrow here, which is pointing to 1.3208, this here. And contracts pulled on the buy side. So this minus number here, you can see in this column here, when it's got a minus next to it, it means the amount of contracts that have actually been pulled. Okay, and then we've got pending bids buy side, which is here. So these are basically orders that are pending, ready to be executed in this section here on the buy side. And then we've got aggressive bid buyers orders. Okay, so these are trades that have actually been executed. So in this column here, these are orders that have actually been executed on the buy side. Okay, and then contracts pulled on the sell side shows in this column here, as you can see up here. So this is the buy side and this is the sell side. Let me just move that. And then we've got aggressive ask sell orders executed in this column here. So this is aggressive buyers and this is aggressive sellers. I'm going to show you in the footprint exactly how that looks, and to explain, we haven't just got buyers and sellers in the market. you've got buy limits, sell limits, so on and so forth, like I've just shown you in the other diagram. Pretty straightforward. So just remember, ask is the sell side, and on this side we have the buyers. Okay, but when you look at this footprint, all these orders on each side of the market are executed orders. So when I say executed orders, I mean they've actually pressed the sell side or the buy side of the market. When you look at the depth of market, it becomes quite confusing because you've got pending orders waiting, you've got orders getting pulled, you've got orders, people are taking profits, etc., etc. Okay. So how does this actually work inside the footprint? Remember that the footprint represents buys and sellers, buy stops, sell limits, buy stops, etc., etc. I'm going to go through that with you now. So aggressive sellers, let me just change my pen. Second. So aggressive sellers in this instance show on this side of the footprint. So this is the sell side. So this appears what we call the ask side. Okay? And then aggressive buying appears on the buy side. So pretty straightforward. Sell side here, and then buy side here. It's taken me a long time to work out how to use the footprint in a correct manner, because a lot of people, a lot of gurus should I say, will say it's just sellers and then buyers. But as you'll see from this video, it's not like that at all. So then we have passive buying appears on the buy side, and then we have passive sellers appears on the sell side. Okay, and then we have what we call a manual closing of a buy. Okay, when you actually manually close your trade either for a loss or a take profit, it appears on the buy side. So manual closing of a buy appears on the buy side, and then a manual closing of a sell appears on the sell side. Are you starting to get the idea now that it isn't just buyers and sellers on each side of the market, because you've got all different types of executions happening in the market? I haven't seen one person explaining this anywhere. So I thought this video would be really useful to you guys. And then stop loss of a buy. So a stop loss, another order type, appears on the buy side. Okay, and the stop loss of a sell appears on the ask, the sell side. Okay, take profit of a sell position appears on the buy side. Take profit of a buy position appears on the ask, the sell side.